Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Tuesday, February 15th, 2022. What a move in the markets today. Solid move to the upside, although in all fairness, where we opened was basically where we closed. Look at the choppy sideways action. But again, very nice gap higher in the S&P as well as the NASDAQ. The NASDAQ really was the outperformer here. If we take a look at the NASDAQ 100, having a whopping day up about 2.4%. We are down a little bit in the after hours. To be exact, the Qs are down about 70 cents in the after hours. That's why you see 2.32% here versus about 2.4%. All right, so again, why are we seeing a little downshift in the after hours? A little bit of just profit taking. There's still some uncertainty over what's going on with Russia. But again, if you go back to my Friday video, folks, when we heard that Russia might invade, it was like Friday afternoon, and then this headline hits that, you might see an invasion. What did I say? I say, don't believe it. Friday afternoons, this is how, things go, and they'll walk it back next week. We saw, Lavrov walking it back yesterday morning, and today Russia pulled back some troops from the front line. Markets love that. Now, what's interesting about this is that not only did we get that news, but then we got PPI numbers. Now, PPI numbers came in ridiculously hot, meaning that the inflation on the producer side was basically at 10%. That is ridiculous. That's high, folks. That is really, really high. And remember, the producer eventually gets passed through to the consumer. So you have to be aware of that. I do want us all to be fully immersed and understand that inflation is here. It is hot right now. The market tended to ignore it today because of the good news that Russia was pulling back troops. But again, if we continue to see hot inflation numbers like this, the Fed is going to have to act more aggressively. Very likely 50 basis point hikes sooner than we all think. In fact, there was the Fed meeting yesterday. We didn't really hear much about what went on there, but I have heard that we might get transcripts tomorrow from that Fed meeting, which could enlighten us about a potential rate hike as early as March, which is, again, just about a month away, their next meeting. Okay, so that's where we stand here. If we go to the Russell on the intraday, and you can see how the tech stocks, by the way, while the spiders went sideways, tech actually gained in the afternoon and closed at highs. It was really a very, very strong day for technology. If we go to the IWM here, the IWM also had an awesome day, up 2.55%. That is a very, very strong day. This was led by the small caps, did really, really well. Stocks like SE, which isn't really a small cap, up 15% today. We saw NET up big. Chinese stocks just had an awesome day. Even GOTU up 20% on the day today. So really nice to see, again, good gains across the board in these stocks that we are holding. Facebook, which is one that I've been holding, was up a little bit, about $3 and change. PayPal, a little bit on the weaker side, but still up about $1 and change. I do want to see those start to gain some traction and start to lead. I do think that will happen. But again, those wouldn't be the ones that I consider leaders today, by no means. All right. If we go to the daily chart, let's flip over to the daily chart. I'm going to start with Bitcoin since I got the chart up already today. Again, as you guys are fully aware, I've talked about this before, and, this is just dead on over and over again, not to sound like a broken record, but I talked about 46,000 as being resistance. We hit that. We pulled back. I said, okay, the big level now is 41,850. We came back over the last couple days and settled in there, and then look at what's happening. We're bouncing right back up. Nice little push on Bitcoin. Again, notice the 46,000 level right here. Again, right to that point, right? So you have pivot, and then pivot, and then right there, and then again, your 41,850 level right there, which denoted the low, and we have bounced off of it. So again, I had a short on Ethereum and VerifiedInvestingCrypto.com. We covered that just a couple days ago when it was down nicely, made over 10% on that short. And then again, I am long Polkadot, I'm long Solana, I'm long Bitcoin here. Not for a big long trade. I'm not holding these things for a long time, but again, just as quick swing trades in the crypto market. Very, very nice action there. No doubt about that. So, again, what's going to happen here? Well, you're going to watch this 46,000 level. If it gets through that, if Bitcoin gets through that, then you do have a shot of 50 to 52,000 as upside. I think once we get there, you do start to get very, very bearish, though. I don't know if it'll get there. I want to be clear. 46,000 is the first level to watch, but if we can get through that, then you have to start looking at 50 to 52,000 as resistance. And again, ultimately, has my outlook changed that Bitcoin will eventually go to 20,000 or sub 20,000? The answer is no. It has not changed. I still see that happening. But again, that's the midterm outlook, 3, 6, 9 months out versus very, very short term, at least maybe a retest of 46, maybe to 50, 52 before that midterm outlook comes in to focus. Okay? All right, so we'll continue to follow that as we go here. I do want to flip over to a couple of these other charts that we always look at. So let's take a look back at the spiders, but this time we're going to go to the spiders daily chart. And again, I'm going to get rid of my after hours, but you can see the after hours there. Let me just get rid of that here just so it doesn't make it even harder to read the chart. You had a pretty nasty couple down days here. Yesterday was more of a pause day. Today, a beautiful up day. Again, for me, I'm in a position where ultimately I think the S&P is going to go down quite a bit more, but I don't know if we're still going to rally back all the way up here, right? So one of the things that's catching my eye is the 10-year yield. The 10-year yield was up today nicely. Didn't really have an impact on the market because of the Russia withdrawal news, right? That was the bigger positive of the day. It was a risk-on asset move in the stock market, right, and crypto as well. So again, you guys have seen that generally I'm holding, a fair amount of longs here, although definitely way reduced over the last couple weeks after we took a lot of profits. But the idea here is that we want to follow, and if we do get high enough, I want to pull the trigger on some shorts. So again, do I look for us to get back up here, or maybe up here? This would be your ideal area. This retrace to that scene of the crime would really be the best scenario. It's quite a bit higher, so I don't know if we'll get there. It's about $20 higher currently than our current closing value. But again, that would be ideal. I don't know if I'll wait that long because I don't know if the markets have that type of energy to get up to that level. Okay? Ultimately, where are we headed? I think we're going much, much lower, right? So again, heading much, much lower here. We've talked about this in the last few videos, eventually getting in this longer-term trend here on the S&P 500. All right, and again, you just have to kind of put two and two together. I love how, so many analysts are so bad at this, but again, I just use logic and charts to dictate my projections. And again, that way you really get really good the outlook is amazingly accurate. And again, if you just think about, okay, well, you have higher inflation, all right, and then the Fed is going to start to raise rates, which they have to do to combat inflation, which is then going to slow the economy. Then you look at, okay, well, what's the positive for stocks here? Well, yes, if inflation comes down, maybe they can be a little bit more loose on monetary policy. But again, unless inflation's going back to sub 2%, I just don't see it. And by the way, there was just a few months ago, there were so many people calling for deflation still. And I was like shaking my head. I'm like, really? How do you print trillions and trillions of dollars and then have a deflationary environment, especially when the government's running up and, all these things? And again, not to say we can't have deflation in 2 or 5 or 10 years, but at least in the short term, I just do not see that situation occurring. Not at all. All right. The Qs here. Nice little bounce on the Qs. Again, I'd like to see the Qs get a little bit higher up in this range before I decide to pull the trigger on a short. Ideally, this dotted line here would be the spot. But again, ultimately, I still think the NASDAQ has more downside, and I think it will continue to spiral. Just a matter of getting the best entry possible. And again, we have to remember that this upsloping trend line continues to be the support line. You could argue that we kissed it yesterday or the day before there, and we got the bounce today. The more this white line gets hit, the weaker it becomes. That's how the technicals work. The more you hit a level, the weaker, again, it becomes. Eventually, it does get broken through. All right, let's go to the IWM here. IWM, beautiful little bounce. So again, we're now starting to head back up, potentially reattacking this same little pivot low area here from just a few days ago. If we get up there and reattack it, is it possible we go through? It is possible. Again, we'll have to see. One of the lines I'll be looking for is this line here, right? Pivot high to pivot high. So we might head up, let's say, to there, and then that would be your next downward shift. This is an inside bar pattern off of this decline, right? So inside bar, but it is not a bear flag. A lot of people don't understand the difference. Inside bars are 40 to 45 degree angles. Bear flags are 45 to 90 degree angles. 45 to 90 degree angles are much more powerful in terms of the pattern playing out versus inside bars are generally patterns you don't want to play on the short side. And if it's an inside bear bar, again, you don't want to play those as the odds are not that great. All right, these little nuances, by the way, I was talking about this in an interview I did today. So important to understand because, I mean, it's all probabilities, right? So if you start, someone was asking about, well, what if you use a Head & Shoulders that's not accurate with the neckline, right? So we know like a Head & Shoulders neckline has to be flat or inclining to be valid. What if it's declining slightly? Well, it doesn't mean it's not going to play out. Anything can play out. The market can do anything it wants, but the odds, the probabilities that it plays out start to go down. And again, that's when you start getting into these situations where the probabilities aren't in your favor anymore, or it becomes a gamble, which is about a 50-50 or so. So anyways, bottom line is just remember that in terms of bear flags. Bear flags are drops. It doesn't have to be vertical. It could be angled like this, but we'll just do a vertical and then a right angle like this. That is a perfect bear flag. Flags, again, 45 degrees or basically anywhere between here, 45 to 90. Inside bar patterns, 45 to 0. And again, that line's not, by the way, super accurate, but basically midpoint, it would probably be more like here, would be the 45 to 90, 45 to 0 level. Okay. All right, next up, let's take a look at, let's see here. Let's go to gold, folks. Now, gold was down very sharply this morning, very sharply this morning. But again, I have to say, it recovered beautifully. Now, you did retrace to this trend line here, which was supported around 1845 by the end of the day, back to about 1853. You did confirm yesterday. Remember, we talked about confirmation. You confirmed the breakout. So again, if you know your confirmation signal, if you've taken the Elite Keys to Unlimited Success webinar, or if you had the $2,100 deal, which is just an absolute amazing deal that gets you all those webinars for $2,100 for a full year, you know that on a retrace, this becomes mega support once you've confirmed. So to see a bounce off of that level today should not be shocking, and it should still continue to be pretty good support unless it starts hitting more and more, in which case it starts to weaken that level. But the initial retrace is really the golden retrace once you've confirmed above a level. All right. In terms of upside, again, you're going to have little pivot points. Again, just think about this, right? So look at this high pivot, draw it right there, and look, you basically went right up to that point before you pulled back. So that makes sense. Your next point, just follow these pivot points. These are very easy to follow. These are going to be your next levels here. And again, if you finally can take out this higher one, then you have a good shot at $2,075 on a retrace for that. All right. So again, gold, good stuff. A little pullback, nothing, again, no technical damage done from the breakout. We'll continue to watch it. I'm still a mid and long-term bull on gold, and I love the fact that it looks like we finally got a breakout of this wedge pattern, which I've been talking about over the last month or two happening in the coming months, essentially. All right, let's take a look quickly at silver here, silver price. Silver had a little bit of a down day as well. Again, we talked about this yesterday. No breakout on silver, but it's still holding within its pattern. So there's really nothing, a trader would not change their bias based on this chart, right? So if anything, you're still stuck in here. Do I think eventually it breaks out? Yeah, I do. But there's still a small chance that I think it still could break down below and go to about 19, which gets you back to these former pivots over here. And again, that is a huge buy level should we get there. And by the way, it may not get there. I want to be clear. For those of you that are waiting to buy silver and you're really wanting to buy silver, there's nothing wrong with taking a small position in this range. And then if it breaks out, you're good to go. And then worst case, if it dips here, you just add to your position. Your average becomes somewhere around here. And then when it goes to $50, you're doing great anyways, right? I mean, that's the one thing that you want to keep in mind. When you're a longer-term investor, squabbling over a buck on silver or, whatever it may be, it may not be worth the risk of missing the trade. All right, now I still believe you have to have chart setups. Like here's a beautiful bull wedge, bull flag consolidation. So the signals still tell you it's going up. But again, you have to determine, what's your outlook. For me, I'm a swing trader. So, the difference between here and here, it is actually significant when you're looking to play something over the course of a month or 2 months or 3 months. But if you're looking like and saying, hey, I'm going to hold silver for the next 5 years, okay, well, who cares about $1 or $2 or whatever it is, especially when you can buy more if it does dip. The other thing I would just mention is I do hold physical silver. So I hold physical silver, physical gold. I hold less silver than gold, but again, as an insurance policy, I like to have a little physical gold and silver, and I think that's smart for everyone. I'm just not swing trading it right now because it hasn't gotten to those levels. Okay? All right. So just some good kind of explanational work there. Lastly, we got to touch on oil. Oil again on the back of that news there. Beautiful, beautiful pullback. In fact, I don't think this was the oil chart I wanted to show here. I think this was it. There we go. So again, beautiful sell-off on oil. Again, I said don't trust a breakout here. I think I even said in yesterday's video that the amount of times that I've seen price get through this many trend lines all converging is very, very rare. And again, what did it take to pierce it? Well, it took potentially a mega war starting, an invasion from Russia, and then major sanctions and so forth. But even that, I mean, the charts are still paramount. And this is what I talk about when I talk about how charts kind of front run the news in a weird way. Like the fact that we're up here and, it looked like it was going to break out. And think about a lot of people probably bought into that thinking it was breaking out. But it's like, no, charts are so powerful. They kind of front run the news and they'll give you a heads up which way the news is going to go. And all of a sudden we're starting to head down. Now the question is, we're only down to 91, 99, 92 bucks. But ultimately, I still think we're going lower. Again, charts generally, they can be broken. But the probabilities, when you see this, probabilities dictate we're probably headed back towards $70 over the next 3 months or so, give or take, on this chart. And again, if you think about it in terms of the different segments I've talked about, you got the midterms. We know that in general, going into big elections, oil tends to fall. If you talk about, the rig count in the U.S. has gone up by over 50%, I think, just in the last, 6 months or year. It's really an incredible amount of new oil coming online from these rigs, from U.S. producers. And then you talk about the Fed raising rates, which is probably the most powerful of them all, which signals a potential slowdown in the economy, which means less demand. All of this is going to come together. I've even talked with you guys about how if you look at the chart of oil in 2008, the stock market was already starting its decline. Oil was going up still, because of rotation of capital, and everyone was running into oil. And then when oil topped out, it collapsed and actually bottomed out. It went from $145 down to $33. And it took about half the time that the stock market did to decline from peak to trough in 2008, 2009, because it didn't start falling till about halfway through. Really remarkable stuff. All right. On that note, folks, I think that's all I have for you today. I will keep you guys posted, but very good stuff out there. Love seeing the markets get some big movement and some big moves. You guys have a wonderful rest of your day. Take care.